Hello everyone, thanks for checking out the video. Today is Wednesday, January 16th, 2013. Let's get right into the charts. The SPY looks like it's continued to consolidate this level, guys. We actually are coming into a time count, so do expect a nice move higher in the coming days as soon as Friday, okay? Based off a time count, what I'm seeing, it does look like there's more upside potential. So let's go right into the next chart. Let's go look at Apple. And a nice move, pretty much showing pretty good strength all day. Looks like maybe it could be a shakeout right here. We did make a nice reversal candle on the daily print, but we did close right into resistance. Remember, guys, I called out in my last video that this previous support, which was right around 506, 505 level, will be now resistance as it was support. Look how many times it hit on it. About 3 times, broke down. Now it's retesting here. But now you're asking, can you go short here? Not really. You have price, right? You have a price resistance, right, at 506, but you don't have a pattern. This is actually a reversal candle pattern. To go short here, you would need like a bearish consolidation, bear flag with multiple candles. Then you could play it short. Here, you don't have pattern. You have a reversal candle. So that bodes bullish. But you have a breakdown that confirms. So that's 1-to-1. You have one bullish signal, one bearish signal. So you would just stay in the sidelines. In this case, you want to see follow through. If you're bullish, you want to see follow through. Close back above the high of this candle. Wait for another pattern, then you can go long. Let's go intraday on a 10-minute chart. And you won't be surprised why we stalled out here on the 10-minute. We did have a 200 moving average to close back above it, and also this upper trend line as well. Where here we connect the highs since the gap down, I believe from China, that news, that is the trend right now. Look, if we connect the pivot highs, very intriguing stuff, and we went right into that level, guys. Let me zoom in, you guys see it again, since you guys know where it's coming from, right into that level. Okay, guys, very intriguing stuff. Let's look at AMZN.com. Amazon holding up very nicely so far, making a nice consolidation, bullish inside bar pattern. Staying above this trend line. This was the previous, you could say this was the previous resistance, and we broke above it on higher volume than the inside bars. That's what you want to see. You want to see consolidation bars lower than the breakout candle volume. So that's looking bullish. So if it consolidates here, maybe one more candle on a time count, maybe as soon as Friday. You know, the charts are saying as soon as Friday we can get another complementary move, supplementary move. So we'll see how that plays out. And our next target, off just what I'm eyeing right now, just does take us roughly to 276, and what I'm just estimating right now. But I have to do more accurate calculations when I'm away from the video, away from the computer. That's what I'm seeing on Amazon. Let's take it like a Google. Google look like it's testing this trend line. Just going to see how it reacts to this trend line right now. Nothing much here to do. We do have a gap fill that's coming up, so that could be a nice short-term bounce area, or maybe a pause candle. You could probably play it intraday. It also coincides. Looks like there's some kind of neckline here. Looks like looks like an inverse, not inverse head and shoulder, but this wouldn't classify as inverse head and shoulder because the neckline is sloping up. It has to be flat or down sloping for inverse head and shoulder to be valid. That's the inverse, okay, guys. So, but there is some support here. Let me draw a quick fib. Let me delete some of these lines, guys. Sorry, I have a lot. Let's see if I can find where this fib is taken from. Give me a second, guys. I go back here. It is right here. Let me just clean up this chart just a little bit so I can give you a level here. If you are interested in going long here on Google, let's take the fib from the all-time low from this range, and back there's also another fib in a way. So I believe it's this one here. Let me clean up the chart a little bit, guys. Sorry about that. And there it is. Let's see. Let's make it a little bit more accurate. Right here at the lows. So Fibonacci. Now you don't ever just rely on a Fibonacci by itself. You always got to line up with a gap fill or something to that nature. And what I'm seeing right here, we do have a gap fill with a 382 retrace. So right in the middle of this gap fill candle, all the gap fill candle everywhere is important. The high, the low, the close, the open of that candle is always important. So anywhere in this range will be a decent spot. If you're looking maybe for a 1 day, a day trade perhaps, you can go long here. Anywhere in this vicinity is decent. This is a gap fill candle. I believe this is probably the gap fill, the gap from Fiscal Cliff. So that, yeah, it is. So that would be actually a decent spot to go long, right here with the 50 as well rising. But ultimately, your trade in my opinion, is the short. I think that's where you get the big move because that would probably coincide with the SPY at the 150 level or 148, right in this level. So your stop would be very tight. Any close above this breakdown candle would be your stop. Or if you want to be more aggressive traders, you could do a close above the 775. That would be a clear stop out right there, or you can get or close or confirmation above this level. That will be your stop out. Okay, guys. So that's what I'm seeing on Google. Let's take a look. What else do I want to take a look at? Let's look at the dollar. The dollar is making that head and shoulder pattern, which you shouldn't be surprised, right? Because the head and shoulder on the UUP would dictate that there's an inverse head and shoulder on the markets, and we do have an inverse head and shoulders. So let's watch if one of these patterns fail. This was preliminary right now, so it hasn't triggered yet. So this pattern is just preliminary, so you cannot trade off it anticipating that this is going to break down and the market's going to go up. Okay, guys. Let's look at the VIX. Very difficult for option sellers right now because the VIX is just hovering at these lows. Pretty much impossible to collect premiums. So that's pretty much why I'm pretty much staying on the sidelines as an option seller, just taking only the best setups right now. So we are hovering right at support that I called out here many weeks ago. Okay, is there anything else I want to take a look at? Let's look at the IWM really quick, guys. Still under the weather, a little bit under the weather, guys. Still a little sick, so I'm going to make this video nice and short. Still consolidating here. Nice inside candle at the upper range. So that's what you want to see if you're bullish. Holding the upper range of this big green candle. That always bodes well. If it can hold that, consolidate at a time count, it does have room to go higher. Okay, guys, and that's what I'm anticipating. The market has a little bit more upside. That's all I'm seeing right now. The Qs look like same thing, still consolidating, a little more sloppy, but still consolidating in this upper range. Because this is the up move, right, off the fiscal cliff. This is a nice green bar, and it's still consolidating in a nice 25% upper range, and that's very bullish. Okay, guys, I think that's everything I want to take a look at, guys. I will update you guys whenever I see something great, and I will talk to you guys later. Peace out.